Hey guys, good afternoon, everybody. Today is Wednesday, September 25th. It is 1:57 right now. Our scheduled mentoring sessions for 2 o'clock, so I got on a few minutes early to set everything up. Once I'm done setting this up, we'll get started with our session. So if you guys have any questions, feel free to put your questions in the chat. Let's see, we got a few things here to update. Looks like YouTube fixed. I hate when YouTube updates the settings and they finally fixed it, so looks back to normal. All right, looks good here. So let me get this link sent out to you guys here in the premium. Good. Sent out here for the public link as well. All right, there we go. So let's get a few moments for people to make their way in, of course. I don't really have any specific questions for this mentoring session, so um, we'll just take them as is. So basically, the session will run for as long as we have questions. If we have some free time, I'll probably just go back into the back testing of the breakout strategy. But for the most part, I'll probably review the entries from this week, and we'll go from there. So I'm on a little early, so I'll get a few minutes for people to make their way in. And then as people come in, we'll start with the session shortly. All right, guys, good afternoon, everybody. Looks like a couple of you guys are here so far on time. We're scheduled mentoring sessions for 2 o'clock. Just hit 2 o'clock, so I'll give it a few more moments for people to make their way in. If you guys have any specific questions, feel free to put them in the chat. We don't really have anything specific to cover today, so we're probably going to cover the entries from this week. We'll do some analysis of market structure for this week as well. And we'll just cover whatever miscellaneous questions you guys have. See, Sam said Dow just stayed down for today, 400-point drop. Yeah, I saw some breaking news regarding Powell today. I didn't really look into it, but let me see if I can pull it up. I'll just I will pull it up on CNBC real quick. So let's see if there's anything here on Bloomberg. Refresh this. Yeah, so I saw this right here. So I think it'll continue dropping probably until tomorrow because we do have the high impact news tomorrow. So tomorrow we have durable good orders, GDP growth rate, pre-market, and then on top of that we have continuing jobless claims, 4-week average, and the initial jobless claims. So looking at the jobless claims data over here, it's forecasted to be pretty mixed. The continuing jobless claims, I mean, it looks pretty negative right here, and then these over here look positive. So the GDP growth rate is forecasted to be positive. Um, Durable good orders looks a little mixed. Jobless claims, this tends to be negative, but when the news actually comes out, it's probably gonna be positive. So we'll see what happens here. But we'll take a look at the overall picture and we'll kind of just anticipate what's gonna happen tomorrow. Um, we can probably start with that because I think that'll probably give us a better understanding as to like what to expect this week. But again, guys, if you guys have any questions, feel free to put them in the chat. We don't have anything specific to cover, so I'm just going to cover things that I think are relevant. And then we will go from there. See, Jason's asking Sean, wants to know how to set spending orders on Top Step X. So to set the like your automatic TP stop loss, when you open the Top Step X platform, on the left-hand side, there's going to be a settings button. So you're probably on the trading button, which is the chart. Go down to settings. And then from there, here, let me see if I could just, I think I could just show you. I don't think there's any, I just want to make sure all my account stuff is hidden. Okay, so I'm gonna hide my account number. Okay, so let's here I'll drag this over. So this is what it looks like. Top Step X, you would go over here to settings. And then for right here for position profit brackets, this is where I put my my parameters. I'll set these up and then I'll just adjust them as I need to on the actual chart when the trade comes up. But this is where I put it in. So I'm risking, well, I just increased the risk. The previous risk was 1,500, but I realized like during this eval phase for Top Step, it's just going to take forever if I do 1,500. So I increased it to 2,500. This is basically where I put it at. So basically I'm looking to risk 2,500 to make 2,500. And then I'm going to make some adjustments to that when the trade's actually active. So that's how you would go. You go to settings, go to risk settings right here, and then that's where you would set it up, Jason. And then whenever you enter a trade, so for example, I don't know why this thing looks all big now. Mine didn't look like this before on the other screen, but basically, so looking at this right here, whenever you enter a trade for a buy or a sell, whether it be market or a pending order, it will automatically place your TP stop loss where it needs to be to risk that amount. I've pretty much calculated it, so I'm doing 5 contracts on here. So 5 times 5 times 100 because I'm doing 100 TP stop loss. Oh shit, wrong. Sorry, my bad. Fix that. So 5 times 5 times 100, and that's where my risk is at, 2,500. And that's how I figured out like what number to put there. Depending on you, yours might be a little different, but this is how much profit risk I'm looking for the breakout. And that's how I set it up. You know, the weird thing was with Top Step X, like someone was like arguing with me about like how this isn't like trading view. This is literally trading view, guys. Like I don't know like where it's just crazy. Like some guy was like arguing with me about this the other day. And this is literally trading view. Like you see the charts, it's just black. I could change the color to black here. I don't want to change it because I don't like it with the black background, but basically Top Step X is literally just trading view. So if you wanted to trade this way on like on Apex, because someone was arguing with me about like obviously you're going to see fanboys that like really are big on Top Step and some fanboys that are really big on Apex. So I was just telling the person that this is pretty much the same thing. Like you're literally trading on TradingView. If you want to trade Apex on TradingView, you just have to log in down here like I have it on. That's all you have to do. It's the same platform. If you want to use the DOM settings, here's the thing where I was where things are like a little different. I remember before there used to be a DOM button right here. I don't know like how to pull it back up. I remember in the past we used to have a DOM button right here on the side. I don't know what happened to it. I'm pretty sure there's a way to pull it up, but yeah, I don't use TradingView to actually trade, so I don't know how to pull up the DOM button like we used to in the past. But yeah, it's pretty much the same thing, guys. And I'm not going to argue with you guys. If you guys want to argue that Top Step is better than Apex, argue with yourself. I'm not going to argue back and forth with you. I use whatever is more compatible with what I'm doing. So like I'm trading more accounts on Apex, so it makes more sense for me to trade on Apex versus Top Step. When I trade on Top Step, I have two different mouses. So I have one mouse for my laptop and one mouse for my computer. What I do here is I just like, for example, today we took the breakout. I hit sell on here, and I also hit sell on my second mouse. So I just enter the trades at the same time, but they're different platforms. There's no way to set the copier for Top Step, unfortunately, unless you're like on Quant Tower, which I'm not. So there's just no way for me to add it to my copier. That's why I have to do it separately. But yeah, there goes the explanation of how to set up Top Step with the risk parameters. Personally, I don't like the platform very much. It's okay, but I don't like it. Like it's nothing that's game changer for me. That'll make me want to switch. So, all right, let's check out the chat over here. If you guys have any questions, again, feel free to put them in the chat. Otherwise, we will continue on with the questions that we have here. So we have one first question here so Sam over here was just mentioning that the Dow stayed down today for 400-point drop. Let me go over here to the clean chart. Let's analyze that real quick. So market opened right here at 6:30. And you can see from today, price pretty much just kept dropping, right? Look on the higher time frames, the 5-minute. So basically price came down from here. And then it dropped a total of about 300 points for today. It stayed down here. So my analysis for this and what I kind of expected to happen here was I was expecting price to come down and then possibly swing back up. The swing back up is probably going to happen tomorrow morning. So tomorrow morning right here, and I'll go on the even higher time frame. So the high impact news comes out at 5:30 tomorrow, this blue line. I think price will probably just consolidate it and range around this area. And then I think tomorrow when the news comes out, it's going to spike up, probably spike back up to the opening price from today, to this area here. And then once market opens, obviously price will go either direction, right? Go up higher or come back down for the correction. So that's kind of what I'm expecting. We looked at the news from today. So like basically this was breaking news from earlier, a couple hours ago or about an hour ago. It said Powell emerges stronger after leading Fed to a big rate cut. Forecasts show many officials likely favored a smaller move, and the chair's soft landing priority drove him to urge for a bigger cut. So, I mean, the cut was big, but it wasn't like humongous, right? It was 0.50 points. So nothing super crazy, but if you guys look at like who voted on it, the majority were for the bigger cut. So if you guys want this article, I can send it to you, but for the most part, it's just a bunch of gibberish. It just talks about like what to expect, and it's pretty much what we all anticipated. We expected the cut to happen and then price to be bullish. So that's why, for example, here I'm expecting this to be bullish tomorrow because it just goes in line with what's been coming out for the past couple of weeks. Tomorrow we have a couple of news events, like you guys are aware. We have the GDP growth rate. It's forecasted to be positive. Last month it was 1.4. They're forecasting it to be 3%. Obviously, that's a big jump. So we're going to see that there. And then also with the continuing jobless claims. The jobless claims are probably going to be negative, but I think people are still going to bet positive because with the cuts, it's going to allow these companies to hire more or pay more. Like from the jobs data from last month, it showed that people were hiring less, but paying the current employees more. So it's kind of a balance there. Again, you guys don't have to know this stuff. It's just stuff that I research and I follow along with just to understand the fundamentals of things. But that's kind of what to expect tomorrow. I'm not saying the breakout is going to be a buy tomorrow because I'm going to have to see what it's like when the market opens. But I probably would be aiming for a buy tomorrow, hopefully. But we'll have to see how that plays out. As he Stanley said, I don't know if you remember, but it played out how I thought. Went up about few hundred points to 42,400, and then it dropped. Yeah, let's see. Let's see, Stanley over here. Yeah, I know you mentioned it. So let's see. You had your marker at 42,400, which is right here. 42,400. Yeah, it looks like it respected it pretty nice right there. It kind of just consolidated around that area. So price came down, and then this is when we got off the live like right at 8 o'clock. It was like a break and retest of that number right there. Price over here kind of consolidated a little bit, came down, retested, and then came down further. So yeah, I mean that looks good right there. I was expecting some sort of correction, but obviously there wasn't much of a correction for today. There was a little correction right here closer to mid-session. So price came down, corrected up a little bit, and just ended up ranging. So I'm expecting a bullish push tomorrow, but don't quote me on it, of course. If I was to take a guess or a bet on like how market was going to react to the news, I probably would say it's going to be bullish. Because I'm just like, it's just going to pile up from like the news that happened from last week. So basically, the news last week indicated a big bullish push for the market, and the data from today is going to follow through. So last Wednesday, the interest rates were cut, and then things are just going to flow in that direction. The only thing that you want to be kind of concerned with is like the all-time high, of course, right? Because price is at the all-time high right now, where it was. So see where price is currently at. Since price is so high up here, it's due for retracement, right? So you might see like for new spike, the new spike might be bullish, but overall price might come down a little bit. I pretty much tell you guys this every year. So this is usually what happens historically, and I'll show you guys a little later, or I can even show you guys a little example. What happens? Typically, what happens here is the market will tend to be bearish from like September up until like October, November. And then it starts to go on, they call it a Santa rally. So if you guys have never heard of that, I've kind of mentioned it. Towards the end of the year, it tends to be bullish. So if you guys want to go and do this yourself, you don't need any indicators for this. You can literally just go back and then mark up basically, or just identify basically like late October up until December. You can do that. Just go to like late October, December, or the new year, and then see how price comes down and then swings back up. That's usually, it just happens every year. It's called the Santa rally. So if you go back over here, let's go back to, okay, so same thing that I just mentioned right here from November up until New Year's. See how that Santa rally played through? Again, right here from like basically towards the end of the year. It had a small rally right here, then it came down kind of sharp, and then it comes back up. So if you want to do that, just mark up November up until December, you'll see, or November up until the new year. It typically has this what we call a Santa rally. This was back in 2021. Let's go to 2022. Same thing over here. Sometimes a rally happens earlier, sometimes it happens later. So you can see over here, this happened a lot earlier. This is in 2022. We had the drop right here from September, or basically August up until September. And then the Santa rally started right here, basically in September. It just came up until the new year. And then let's do 2023. Same thing again right here, right? Late October, like I mentioned, up until the new year. It just happens every year. It's the same thing. Price comes down, and then it eventually comes up. If you want to go back further, and this is what I mean about like just understanding the patterns in the market, right? These patterns happen, they happen the same time every year. So that's why like we kind of understand what to do. So here's 2020. 2020 was a little tricky because it was COVID, but it still worked out. So again, right here, late October up until the new year. And you guys will hear me talk about this again next year. This happens every single year. It's just historically, this is usually what happens. See, price comes down, then like late October, it rallies up. We go to 2019, same thing. 2019, it happened super late though. So you can see over in 2019, it started like late December, like around Christmas time. But then towards the end of the year, it rallies all the way back up. But that's kind of what you can expect. All right, let's do one more year. One last year over here. So you can see it kind of comes down a little bit, consolidates right here. And then we have that Santa rally towards the end of the year right here. So basically November to December, that's where you can expect the bullish push. And then same thing with what I said about here. Price hasn't really dropped yet, right? So you might see a little bit of a drop. And then towards the end of the year, you'll see a rally to the upside. So I mentioned that pretty much every year because it's something that you can't miss. It's a pattern that repeats itself. Same with like the breakout we take, we just follow a pattern. Same with the market flow V2s. Nothing really changes too much. That's just the way the market typically moves. So yeah, expect a bullish push towards the end of the year. Yeah, exactly. Like Sam said. Sam said, yeah, 23 has it too. Interesting. Yeah, pretty much every year for the most part. All right, so let's go down the questions over here. So I'm gonna start with the first question from iPad. iPad is asking, can you explain the momentum? Um, oh, sorry, MF entry, market flow entry for today. So let's go to the market flow entry from today. Let's go back to, it was 640, right? When the entry came up. Okay, so let me explain the market flow entry. I'll just leave the indicators on. It's not super necessary to have them all up, but let's go down here. So I'm going to turn this on, and then I'm going to turn on the levels indicator. So here is the explanation for the market flow entry from today. We had a sell signal right here. So the criteria is you're looking for momentum. That's going to be the first step. Wherever the momentum is, that's the direction you're going to be looking to trade. So right here, we have a sell momentum, right? I'll turn off the levels first so we can have a clean chart. So right here, we have a sell momentum. This indicates that, okay, we're going to look for some sells only right now, right? The next criteria is you want to look for the trend. You can see here prices below the pivots. You can see the trend meter below is bearish. So there goes the second criteria. You have the first criteria of a bearish momentum. You have the second criteria of a bearish trend. You can see prices below the pivots. Pivots are angling down. And then the trend meter down here is red. You don't have to have all that criteria, but you just need to have an idea of where the trend's currently at. You need to make sure that the trend lines up with the momentum. So with that said right there, there is the two criteria. That's basically all you need to identify the direction you're trading in. The next criteria is you're going to look for a retracement. So the retracement is going to be back to the pivots. You can see right here, prices below the pivots. And now you're looking for the retracement back up. So with the retracement over here, you want price to pull back up and you want to get in somewhere around the pivot one. But your entry is going to be set, like your pending order is going to be set at the whole number. So right here, you can see that we have price coming down. We have it retracing up. The closest whole number to pivot one over here is going to be 42,570, right? So you're not going to take the lower one because it's too far off. This is going to be the closest whole number. So with that said, you're going to set your pending order right here. And then the TP stop loss is going to be 60 TP, 30 stop loss. This is what we've been using because the volatility is a lot higher. You can go for a 1-to-2. If you want to do a 1-to-1, you can always do a 30-30. It's just really up to your preference, right? I would recommend doing the 1-to-2 so that if you do lose a trade, if you win a trade tomorrow, you're going to be back in a profit. So you just have a better risk reward if you do a 1-to-2 versus 1-to-1. Or if you want to take something that's quicker, you can always just go for the 10-30, right? This is probably the most risky out of all of them for the first entry. And why I say that is because the first entry is typically going to have the biggest move. So for the first entry, you usually want to go for the bigger target, right? Because you're expecting price to continue dropping. If you want to take smaller entries within, you can continue taking them. But for the first entry, you want to go for the bigger one because that's kind of where you're going for that home run. So right here, we have a sell momentum. We have a bearish trend. You're now looking for price to pull up right here, fill your order, and then come back down to your TP, right? So this is where the entry happened. Let's go to the next candle. Price right here pulled up to the 42,570 price. It would have filled at that point. You can see how this candle pushed up. Your pending order right there with your pending sell limit would have gotten filled, and now you would have been in the trade, right? Now the trade's active. You let the trade run, and you can see right here on the next candle, it goes straight to full TP. That's a market flow V2 right here. So this was the first entry. If you wanted to take the next entry, like say, for example, you took this one, you're happy with it, you want to keep going, right? That's completely fine. You can keep going. So now that this is hit, you can do the same thing, but I would recommend going for the smaller TP at this point, because at this point, the bigger move is already passed, and now you're just going for the smaller scalps within. So now at this point, if you want to get back into this position, your entry would be waiting right here at the 560 price, right? Because the pivot's right here. Ideally, you want to go to the one that's before the pivot, not one that's after the pivot, because you'll get better entry up here. So if you would have waited right here at the 42,560, you'd look for price to swing back up. Hasn't filled your order yet. Now that price is down here, the pivot's down at this lower point. Now your entry will be moved a little bit lower at the 550 price. So now if price swings up, you can see right there, price came up, it triggered the order, filled your TP again, another full TP right there. So if you wanted to keep going, you do the same thing, just set up another order at the same price point. Right? Again, right there at the 550 price. Price again right there, filled it, and then went straight to TP right after. So basically two entries that hit right back to back. And then again right here, if you wanted to take another one, you just wait for this to retrace back down lower. Once it retraces back down lower, below the pivots, you would do the same thing. You just have another pending order. Just you would have another pending order just waiting right here. So again, like I said earlier, guys, the bigger entry is going to be the first one. The ones that follow it, you can go for that smaller TP, because at that point you already have the bigger move. And now if you're just trying to catch the low-hanging fruit, you just enter some more. If you want to go for a bigger TP stop loss, you can, but I think it's more ideal to just get in and out very quickly, because you're not sure when the price is going to reverse. Since you made big profit on this one already, whether you lose any of these trades, it doesn't matter. You're going to be in profit regardless of the fact, because you already made double profit on this one. So you basically have two in the bag. And then if you have a loss here, you'll still be in profit by one win. So again, you're looking for another entry here, if that's the case. You can see price here again is a little lower. So now that price is below this point, the pivot is down here. So now you're moving your entry down here. You can see how price comes up, fills the order, another full TP right there. And there's like 3 back-to-back wins right there for the market flow. So again, like I was saying just now, if you want to take another one, you just got to keep moving your TP a little, or not your TP, your entry a little lower. So again, right here, you have another opportunity. It's going to be at this lower price point. Now at the 540. Didn't get filled on that one. If you want to try to get into this, you just put another pending order right there. Doesn't fill because price drops lower. Now your entry is just getting lower and lower from here. Right here at the 530 now. Doesn't fill. So at this point right here, you just keep moving it lower. So it didn't get filled right there. Now the pivot's down here again. So you're just moving it lower and lower. Now at the 520. Looks like price comes up, comes back down very sharply to basically hit your TP. And then that trade would have been done again right there. Once the buy signal comes up, you're done. So buy signals up here, no longer any more entries. I look for entries between 640 and 7. You can look for entries outside this time frame. But from my testing and what I've been looking at, this is where the edge is at. The edge is between 640 and 7, because this is where the volatility is pretty much the highest. If you look for entries after 7, typically the volatility gets kind of flat. So I don't like trading at all after 7 o'clock. I'll look for entries for you guys during the live session, but for the most part, the volatility here pretty much dies down. So you can see over here, price just continues to drop lower. Once you get another sell signal, you can look for some more entries, but there's no sell signal here. Again, like I said, after 7 o'clock here, the market starts to consolidate. This is why I don't like trading after 7. But if you guys want to keep trading, it's all up to you. If you want to keep trading, you see a sell signal right here, you're like, okay, fine, I'm going to look for some more entries. You look again for the same retracement. So the pivots are right here. Your entry is going to be at the 500 mark. So you guys can see it's pretty simple and it's pretty intuitive. Everything that I do, it's logical. I'm not just taking random entries. There's entries, there's logic behind each entry. So again, the sell signal is right here. You're looking for price to retrace back up, back to that 500 level. Right here, you're now looking for it to drop down to the 490. And then this is where it becomes a little tricky. So if you want to take entry, it'd be right here. This is where it becomes tricky. And the reason I say that is because of the sessions, right? I will be okay taking the entries if it's like bouncing off the sessions, but if price has to cut through the sessions to hit your TP, I wouldn't take it. But I'll just show you this for another example. The entry would have happened right here at the 80 mark. You can see here it hasn't filled yet. And then this is where it becomes messy. So at this point, I wouldn't look for any more entries. So like just what I said right now, the next entry would happen here at the 470, but in order for you to hit your TP, it would have to cut into the sessions. So at this point, basically would have been done. So there's a quick explanation of all of the market flow entries from today. If you guys have any more questions regarding this, feel free to pop into the chat. It's pretty self-explanatory. You're looking for momentum, you're looking for trend, and then you're just looking for this pattern. So you're looking for, that's why it's called market flow, because you want to go with the flow of market. So this is like literally what you're looking for. You're looking for price to come down, come back up, and then just say the pivot's right here, and that's where you're taking your entry. So you have your pending order just hanging out right there waiting. When it comes up, it'll automatically fill, so you don't have to really do anything. Comes down, hits TP. Comes down, comes back up. Again, you're just waiting with your pending order right there. Fills, goes back down. That's literally what's happening right over here. Yeah, exactly. Sam said like catching the pullbacks. That's literally what you're looking for. You're just looking for market flow. You're looking for market to flow in a direction, whether it be to the downside or whether it be to the upside. So you're just getting the pullbacks. Price pulls back, get your entry, full TP. Your entry, full TP. Entry, full TP. Same with the other direction. If you're looking for a buy here, you're doing the same thing. You're just looking for price to go in your direction. You have momentum, retracement, entry, TP. Push in that direction, retracement, entry, TP. And you're just getting in and out very quickly. Like I said, from my data that I pulled or that I've looked at, the sweet spot and the edge happens between 640 and 7. You can see over here between 630 and 640, the market's too crazy. So I wouldn't mess with it right here. There's just too much going on. The volatility is too high. You're not going to find any market flow happening in there around that area. You're going to see a lot of manipulation happening around that area because it's market open. So that's why I say 640, because once 640 hits, the market flow is starting to move smoothly, and that's where the entries will start to hit. So like 640 and then 7 o'clock, the reason why I stop around 7 is because you can see how price starts to consolidate around here. You just got to be smart with your entries, guys. Like I know some people try to trade all day. There's no reason to trade all day. Just find your edge in the market, right? Like for my breakout. My edge is it's usually between 630 and 7. That's how all the entries came up from this week. So if you guys follow the breakouts from this week, that's where's it at? Like if you look, it's crazy because it's like almost identical, the entry from Monday and the entry from Tuesday. Like literally the breakout happened between 6:30 and 7. Once it hit 7 o'clock, went straight to TP. Same with Monday. Breakout happened right there. It was in a big manipulated push, and then it came down at 7 o'clock to full TP. So it's just identifying where your edge is and identifying where everything lands, right? There's just you have to put logic behind your strategies. You can't just like enter at all times. I mean, you can enter at all times, but you're not going to find consistency that way. You just got to find where your edge is at, dial in during that time, and then take your entries and then just be done with the market. And that's kind of what I've been doing. So yeah, there goes the examples and the explanations of the market flow. If you guys have any more questions or if you guys are confused about it, just pop into the chat. I'll try to break it down a little more, show you guys more examples. But for the most part, it's pretty simple. You just have to look for that pattern, look for market flow to move in that direction, and then you pretty much catch every retracement. So there goes that right there. Let's see, Max is asking, hi, Sean, can you go over some confluences for the liquidity pushes? Yeah, sure. So big congrats to Max here. If you guys saw Max, he posted in the chat. He private messaged me earlier, but he also posted in the profits for today. So he was kind of like worried because he got if you guys saw in the chat yesterday, I think he posted, he was kind of worried because he got his status changed to under review for his payouts. It was like his first big payout. I told him not to worry because they're just going to review his trades and then he'll be fine. He was kind of tripping out about it, but you guys can see over here, he finally got his payout. So he confirmed that there was nothing wrong, and he got paid out 2,750 per account. I think he had 20 accounts, so 2,750 times 20. He got paid almost 50K, 55,000. So big congrats to Max over here. I know his name says Ethan here, but his actual name is Max, or I think it's Max. His payouts got approved. I know a lot of people are tripping out about payouts with Apex. You know, honestly, if you guys are following the rules and you guys aren't doing something sketchy, you guys will be perfectly fine. So Max over here, that was the first time he went under review, and yeah, he got his first payout. He said he's finally profitable. So he pretty much grinded out for like the past couple months. I think Max joined the community earlier this year. He was never profitable. He had trouble, like he just had trouble like being consistent. So I told him to find out which strategy that he was using. And the strategy that he uses is liquidity. That's all he takes. So he just basically takes the few liquidity pushes that we have that show up in the morning. So he takes like the first couple liquidity pushes, and that's about it. That's all he does. He traded on tilt like maybe 1 or 2 days, but I just, you know, whenever he has a problem, he just talks to me. If you guys have any problems with trading, just send me a message, guys. You know, I think just talking to me will literally change everything because that's all you need sometimes. You just need somebody to like chill you out, right? Because sometimes you guys will be stressed out about over trading, revenge trading, and stuff like that. Ethan, I told him to follow like one strategy, 1 or 2 strategies. All he does is take I think he takes like 2 or 3 liquidity pushes a day. That's literally it. And you guys have seen the liquidity pushes work. You just have to be on time and you have to be paying attention to it. The thing with Max is he doesn't even have the indicators. He just comes on the live session in the morning. He sees where I mark up my levels, and then he picks 2 or 3 levels that he wants to take. That's all he does. And yeah, he got paid out right here, 2,750 per account. That's the max payout on his 300K accounts. I think he has 20 accounts, so he got paid out 55,000. I think this is the biggest payout I've seen out of like the members in the group. And all he takes is liquidity. That's literally it. So yeah, congrats to Max there. And yeah, so Max, you know, it goes hand in hand with what he was asking. He said, Sean, can you go over some confluences for liquidity pushes? So yeah, we'll go over those confluences right now. So the main confluences that I can really recommend, it's the same confluences I covered last week. I think I set it up over here. So the confluence checklist. No, not that. Okay, right here. So there's only like, I mean, they're all kind of the same, right? So Max asked this question last week during the mentoring session. I'm glad he asked this pretty much every week because it doesn't change. I just want to confirm that it doesn't change at all. So the main confluences that you want to look for are the trends. So first you want to confirm the trend. You can use any indicator you like. If you want to use a trend meter, use the trend meter, right? If you want to use the pivots, use the pivots. If you want to use momentum divergence, use that. If you want to use all three, be my guest, right? Use all three. It'll probably increase your odds of hitting. So let's take a look at the liquidity pushes from today. So I'll show you the liquidity pushes from today. Let's just I'll just remark the liquidity from this morning, and then I can kind of point out, I can probably just basically show you what Max looked for when you took the entries for today. So let's mark up liquidity right there, right there. I'm gonna turn off the sessions because the sessions aren't really required for the liquidity pushes. So I'm just gonna kind of point out which liquidity pushes Max decided to take for today, or which ones I would have assumed he took. And you don't have to have like a full, like your confluence doesn't have to line up perfectly. It's just, you know, obviously the more confluences you have, the better. So this is how I mark up liquidity, guys. I just go down. So I start with the daily chart, 4-hour chart, 2-hour, 1 hour. I just go down the time frames by half marks. So I went from the 30 down to the 15, and I'm just marking up liquidity here. So you guys have an idea of where these entries came from. Okay, so looks like we marked those up right there. I'll go down to the 1 minute. And it looks like we are good here. Okay, so every morning I mark up liquidity here. Let me see where that list is. A little closer. Closer. Okay, so looking at this right here, let me zoom out a little bit. So for Max's questions, he was asking, okay, what confluences would I use? Okay, looking at current price, what does it look like here? The trend is bullish, right? Price is above the pivots, trend meter is green, pivots are angling up. The momentum divergence right here is bullish as well. So you have like basically three confluences here for the trend. The momentum's not there. So looking at this over here, the direction for momentum is not bullish right now. However, the direction with the pivots are bullish and the momentum divergence is bullish, right? If you want to go even deeper, you can see down here that there's a double body rejection. So there's a V1 variation pattern. So with that said, you have so many confluences here for a buy, right? Market's going to open in the next minute. You have a bullish trend meter, bullish pivots, bullish momentum divergence, bullish pivots right here for direction, also for momentum divergence. And then lastly, this is like the icing on the cake. You have the V1 variation showing up right there, right? So at that point, you have 1, 2, 3, 4, 5, 6, 7, 7 confluences. So what I could see here is if Max is looking for entry, I know he's going to take these two right here, almost guaranteed. He's going to take these two right here, right? He's going to take this one, and he's also going to take this one right here. I don't think he'll take this one out here because this one's a little too far out. But looking at this here, let me just start off with the first candle. So let's just go to the first candle right here. See that? Both of those hit right there for full TP. So he hit the first one and he hit the second one. Those are probably his two entries for the day. And then he was probably done. He was like, okay, he locked in a couple of $1,000 on those trades. And then he wrapped it up. That's all he does. He just waits for that one entry. And then he goes back to playing his video games. I know Max is playing video games because he's on my friends list here. I can see when he's playing games. So I know he's playing a video. I literally see him on the live session. So he like gets on, he takes his trade, and then he goes to play League of Legends. That's like I see him on the Discord almost every day. He'll be on for like 10 minutes or like a few minutes. And then while we're trading, sometimes I pull up the Discord and I see he's playing video games. That's like all he does. He goes in, takes 2 liquidity trades, and then he's done for the day. Sometimes 3. I don't know how long he was on today, but that's literally all he does. He takes the 2 entries. And then, for example, here, if price starts to swing down, so you can see right here, price starts to swing down at this point. Here, then I could probably expect somebody to maybe look for the sell. There's not very many confluences here for a sell, but I can see some people would probably look for that reversal back to the downside. And then when price does finally come back down, like someone would look for a sell signal, right? So looking for the sell signal here, the sell signal finally comes up right there. Price is now below the pivots. The trend meter is red. Divergence is bearish. You have a V1 variation pattern right here. This is where you can shift it. So you shift from looking from a buy up there to now looking for a sell. Sell signal, bearish pivots, bearish trend meter is bearish, momentum divergence is bearish, V1 variation pattern. Again, a bunch of confluences right there. And you can see that he would probably look, or if anybody was to take this trade, they'd probably look for a sell. The other person who applies this strategy a lot would be Jamie. So if you guys saw Jamie in the chat, she also posted, she got funded, I think, a bunch of accounts. Let's see. So Jamie over here, I think she posted her PA accounts. Andre passed as well. He got up like 4 150K accounts. And then Jamie over here, where's she at? Yeah. So I think she locked in like 4 250K accounts. All she does is take liquidity. So if you guys want to take liquidity, there's a lot of people in the group who are taking them. And if you just follow the confluences here, you can kind of look for the entries pretty easily. So again, right here, I'm going to show you the same thing. We have the bearish confluences and whatever right there. So for this next entry here, same thing. You just look for price to drop through here and fill your order and go to your TP. Let's go to the next candle. This right here looks like it hit the first one. And there you go. So there's basically 4 entries right there that came up, 4 liquidity pushes. So I wouldn't have taken this top one. Like I said, it was kind of too far out. First 2 right here got hit. And then the last 2 right here got hit. So for maybe Max took all 4, maybe he took 2. I don't know. It just depends on like what he's doing or what he's aiming for. But if you guys do want to take liquidity, I would recommend just like, setting up, getting ready for the entry, and then just putting your pending orders there. So have a pending order waiting right there, have a pending order waiting right there, and then you just let the trade run. You don't do anything. You kind of just let the trade play through, let them get triggered and hit their TP, and that's it. So that's what I like about these entries. So I think liquidity is like one of the good strategies to apply because you can put a pending order. You don't have to worry about hitting market entries. And then same with the market flow V2s. It's you just have your pending order the same way, but looking for those retracements. Stanley's asking what's the stop loss on that. For this, I think they're using a 1030. So they're using a 10 TP, 30 stop loss. It's just to have that cushion in case price retraces back. Because you can see here, sometimes price will like trigger and then it'll retrace down a little bit before pushing right through. So it's not like you're planning to lose a trade. It's just that you want to have that safety net just in case price does retrace at all. So I think they're using a 1030 on that for the most part. So other than that, let me scroll up and I'll see what other questions we have here. Thanks, Sam. Yeah, Sam said there's still a DOM there. It's you have an icon left bottom corner. I don't see it on mine, but I know. Oh, it's right here. You're right. Well, somewhere around here. The DOM. Oh, gotcha. Yeah. No, it's fine. I know there's a way to pull it up on here. I just don't know how to do it because I haven't really used it on TradingView. All right, so let's see what else we've got here. So Patricia was asking if I can go over the V2 market flow. So I went over those already. That's been answered. The other question here is from Jonathan. So Jonathan's asking, Sean, can you show where are we supposed to enter for the momentum breakout? It's right at open. So like generally what we'll do is or I'll just go to the regular chart here. So let's go back to like Monday's entry. So for Monday's entry over here was for a sell. The entry happens right at open. So if you're on the premium, Jonathan, right? So like since you're on there, I post the direction in there right before market open. Market opens right here at 6:30. So around like 6:29, like we usually count down. We get down to like 6:29, like the last 10 to 15 seconds. I'll count down like 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And as soon as this candle closes, that's where you enter. So we just hit the market order for a sell right there for 100 points. And as soon as the candle closes, like immediately on market open, that's where we take it. The trade will be running. And then it's pretty much a set and forget. Once you have that set up, you'll just go over to your parameters and then you'll just adjust them here. So like you'll get to whatever the exact numbers are here. And then from those exact numbers, that's where you'll set up your parameters for your TP stop loss. Because it's probably not going to be exact. You might be off by a few points. So I just like open this up. I look at the TP. I just adjust my TP to that number and then my stop loss to that number as well. And then you just let the trade run. And this was the entry from Monday for full TP. Let's see, question from Aiden. Aiden's asking, I know you were previously using news to determine the breakout entry. Do you remember when you switched to momentum and which time frame do you use for momentum? working on an Excel sheet for my back testing. So I use the 1 minute. That's all I use. You can test it on different time frames too. So if the 1 minute, if you don't like the results from the 1 minute, I think you'll like them. But if you don't like them, you can always try a different time frame. The time frames I would play around with would be 3 minute, 5 minute, and 10 minute. The 10 minute usually lines up with the 1 minute, so there's not going to be much of a difference there. On the 3 minute and 5 minute, you'll typically see a little bit of a difference. But yeah, I switched over to just the momentum. I think it was just this week. Yeah, so this is actually the first week we switched over to just momentum. Previously, we were using the news. The reason why I changed from the news to momentum is because of the subjectivity of it, right? So before I would use the news, and it's like very subjective because whatever the news releases, I can forecast it to be a positive news event, or I can forecast it to be a negative news event, and that doesn't mean that that it's exact, right? So I couldn't really positively backtest it because there's just too many factors that go into play that are subjective. Like that's the reason why I moved to momentum, because with the momentum, I know exactly where the entry is going to be. Like you can literally you can just replay to the 630 mark, and then just based off the momentum there, that's where you would take your entry. So like I was saying during the live session, what I was saying during the live session today is the good thing about this strategy is that it's based off one criteria. So if it stops working, say for example, in 2025, it just doesn't work anymore, right? Instead of using this, we can just flip it the opposite way. But from the data set that I have here, it's been working for like the past, like basically the past year. I'm gonna go farther back. So I've only have data, I have data up until November 20th. I'm gonna try to go, or November 20th of 2023. I'm gonna try to go back as far as possible. I'm gonna go back to like 2022, 2021, 2020. I'm gonna try to go back as far back as possible. And I'm gonna try to get as much data as I can so that I can see if there's any shifts in the market, right? Because from the data here for a whole year, the data is just incredible. If you do the math, so let's see, let's just do the math here. So 45 divided by 62 trades. This gives us a 72.5% win rate. This is a really good win rate for a breakout strategy. This win rate's incredible. It's crazy that like it was able to yield that within that time period. So with that said, from November up until September, it was a total profit of 2,800, right? So for example, if I was doing this breakout every day from September or from November up until September, and I was doing 3 contracts, so 3 times 5 times 2,800 profit or points, that would be 42,000 profit per account, right? For basically almost a year. You multiply that by 20 accounts, that's almost $1 million in profit. Like I'll take that risk to make this much. That's why I'm saying like this strategy is so powerful that like this is what I'm going to be using for the hedge fund. And this is why I'm going to close signups, because like I don't want to share this with people, right? If we're making this much money, I'm okay with sharing this with like you guys, because you guys have been here from the beginning or from like however long you've been in the group. But I don't want to share this with the public, because if everybody starts doing this, it's not going to work as powerful as it has been. So, and the reason why I do this back testing data is because you can see over here that I'm trying to figure out like how long will the losing streak last for, right? Losing streak here, the biggest losing streak that I've noticed, it lasts for about 4 days. So I'm going to calculate my risk basically to a 6-day maximum. So in order for me to blow my Apex accounts, I would have to lose 6 days back to back. There's no data here that shows that ever happened. So I'm going to go back as far as I can to make sure that there's nothing here that happens where I lose more than 6 days. But even if that was the case, if I was to lose more than 6 days, then I would just go and reset. I just go and redo my evals, right? Because for the most part, it's pretty active. You can see over here, you'll go on some pretty nice win streaks. So the win streaks over here, you can see they go on for pretty long while. Sometimes you'll have like 2 wins, 1 loss. You'll still be in profit. Sometimes you'll have like a break-even week. I like to set these up by weeks. So for example, over here, if you look at September 20th or September 16th to the 20th, it was 4 wins, 1 loss. That's basically 400 points in profit. So for that week right there, it would be 4 wins, 1 loss. So that'd be 300 points profit, right? So 3 times 5 times 300, that's 4,500 for the week for 1 account times 20 accounts. That's almost 100,000 in a week. It's a lot of profit. for last week, basically, September 16th up until the 20th. For this week so far, we have 2 wins and 1 loss. So we're net +1. We'll see what happens Thursday, Friday. Hopefully those are wins, and then we'll just keep stacking them up from there. So yeah, so back to your question, Aiden. Basically, I'm doing the 1 minute chart. And we just started doing this week. I just had trust in it because I did the data already, so I had an idea of like what to expect. So that's why I took it, even though it hasn't been really tested real time. The thing is, you don't really have to test it real time because the back testing tells you exactly what to look for, since the momentum doesn't repaint. So yeah, there's quick response to your question there. Let's go and see what else we have here. So let me scroll up real quick. Stanley said, how often do you find yourself pulling profits early on the breakouts, not including because you made a mistake? So I'm actually not pulling profits early at all, Stanley. I'm just letting them run because, like I said right here, the data shows that if you just let it run, yeah, you're going to run into losses sometimes. But for the most part, instead of pulling early, I'm just going to go and try to shoot for those full TPs. Because if you pull early, it's not going to work. Like the strategy is not going to work. Say, for example, here, if we pulled early on like a good amount of these trades, we kind of be screwed, right? Like for this week, for example, I kind of screwed up on Monday because that was the first day of me doing it, and I pulled early on that one. So Monday was a screw up. That was I pulled early, but I shouldn't have, and that's why my profits here aren't they're not even, right? So right now, I'm currently in profit on these accounts 1,000. It should all be around like 1,600. So this is the only account that was okay. But these accounts over here, I screwed up. So like I'm short about 500 profit. So for these over here, I gotta let them run because if I don't let them run, then I'm gonna be kind of screwed because like I just said, these over here I screwed up on Monday, so they're like not full profit. They all should be around this profit right here because we're net 1 win for the week. So even though we had lost today, we should still be in profit 1,500 or 1,500 plus because if you just follow the strategy as it's supposed to be how it's supposed to play out, it'll just balance out. Like long term, it'll balance out because you're gonna find a win streak. Like for example, from today we had a 4 win streak. So if you do the math, right? So say for example, we had 4 back-to-back wins, right? So 4 back-to-back wins, that's 400 points. So if you do 3 times 5 times 400, we'd be up 6,000 in profit. Today was a first loss for that win streak. So you subtract that by 1,500, and you should still be in profit overall 4,500. So yeah, it's that I'm just gonna let the trade run. Like I'm just gonna I just have to suck it up, right? When I take the trade, it's like, okay, I'm gonna have to like suck it up whether it becomes a loss or a win because I'll understand that long term it's gonna play out. Like long term is even if you have to eat the loss, you're gonna bounce back and you're gonna make more profit. So you just gotta calculate your risk. So like I was saying earlier, because you're still in your eval phase, Stanley, you don't have like extra threshold to like take bigger risk. Once you're in the funded phase, then your threshold becomes unlimited. So right now your threshold is at 7,500, right? You divide that by 6. This is how much risk you should be taking or have per trade. But once your threshold goes up, so for example, right here, like I said, if you were up on a 4 win streak, right? So say for example, your threshold was at 7,500. It was like a brand new PA account, and then you had 4 wins. So you do that plus 6,000. Now your threshold is at 13,500. So here you divide this by 6, and you could risk even more. So instead of doing 3 contracts, you could do like I'd say like 4 contracts, right? 4 times 5 times 100, or even more than that. 5 times 5 times 100. Yeah, at this point, your threshold would be higher, so you can even make more. You'd be at 2,500 risk versus 1,500. So you kind of just have to do the math. You just have to engineer it to understand like this is how much you can risk during this period because that's how much you have. And it's pretty crazy because if you think about it, like say for example, you just built up a bunch of profit in your account and then you're at like 2000, say you're taking 5 contracts now. So 5 times 5 times 2,800, and you just got to do the math. That's 70,000. It's a lot of profit for just one account, right? This is like for a year's time. You multiply that by 20, it's crazy. It's like over $1 million in profit. You just got to stick to the game plan. The game plan is take the trade, let it run to TP or let it run to stop loss. Don't pull out early. Don't get scared. Don't get nervous. You just got to stick to the game plan. And you can see like the numbers add up. It's just you got to get to that point where you have 20 PA accounts. So you just got to keep building, build the account, get PA'd, and then just keep funneling that money to get more accounts so that when you do get a payout, it's like it multiplies. It's basically like what what Max did here, right? Max just stuck to the game plan. All he did was take liquidity pushes, and now he's getting paid out like over 50K in payouts. The thing is, he's getting the max payout on here because this is his first payout. So it doesn't get cut down to 90%. He gets the full 100%. So like 2,750. Normally you'd have to times 20. So this would be the total. And then if you get your 90%, you'd have to drop it down to like 49,000, which I wouldn't be complaining about. I'd still take the 49,000. But because this is his first payout, he gets the full amount. He gets the full 100%. So yeah, exactly. Sam said, yeah, it's patience and trusting the process. And yeah, Sam said, yeah, you wouldn't touch the trade whether it's 100 TP or 100 stop loss, not like 50 points. Yeah, so initially I was thinking if I should have a trailing stop, right? I think we talked about that. I had the trailing. That's what screwed me up on Monday, because on Monday over here, let me go to my profits. So I forgot to turn off the trailing stop. That's where I screwed up. On Monday right here, we had the first trade for the breakout. And then I was supposed to make 1,500. You can see only one account did that, but the rest of them closed at 735 because I had a trailing stop. So it gave me half profit. But this one over here, for whatever reason, this is my personal account. It gave me the full profit. It just didn't even listen to the trailing stop. It just went straight through. So yeah, that was my mistake on Monday. But now moving forward, I'm just going to let them run to the full move. Let's see, another question from Stanley here. Stanley is asking, Apex didn't clearly answer my question. Do you know if the trailing, okay, so pretty much I kind of touched on that slightly. So Stanley said, Apex didn't clearly answer my question. Do you know if the trailing threshold resets daily or does it stay where it last left off? So it stays where it was last left off, Stanley. So let me just show you real quick. So say for example, and I'll just give you an example here. It's probably the best way. So I hate this text box. Okay. So starting threshold is 7,500, right? So say day one, you lose 500. Just say 500, right? So if you lose 500, now threshold is at 7,000. Stays there so you make more profit or lose. So say day two, you make, and this is where it gets kind of tricky because it's different when you're in the eval phase versus when you're in the PA. So say for example, the day two, your breakout hits full TP, right? You make plus 1,500. This is where it's tricky because during the eval phase, he doesn't go past it. Now on eval, your threshold goes back to 7,500, which is dumb. I don't know why they did it. Well, I know why they did it because they want you to get trapped in the they don't want you to over leverage and then like YOLO your account where you have an extra threshold. But if you are on PA account, the threshold goes past it. See what I mean, Stanley? So this is basically where it ends up. So it'll stay at whatever number you're at. But the main difference is when you're on the eval, it gets capped at 7,500. So you can never really go past that. But if you're on your PA account, um, it goes past it. So if you made, for example, you start at 7,500, you lose 500 the first day, you go down to 7,000. Then you make 1,500 on the breakout because you let the trade run to full TP. Now your eval goes back to 7,500 where it's capped at. But if you're on your PA account, your threshold goes higher to 8,500. And then the same thing happens over and over and over again. But it stays where it's at until you either pass the account or blow the account. But your threshold just it pretty much adjusts every time you take a trade. So I know it's a little confusing, but once it happens to you, it'll start to make more sense. Like once you have one PA account, it'll start to make more sense. The evals are like it's like the hardest part, honestly. The evals are hard on the 300Ks. If you weren't following me before, because I know you took a break, but the evals for me, in order for me to pass my 300Ks, I think it took me like 3 months. It took me forever because I was taking it conservatively. Now that I've done it, I'm like, okay, it's probably easier to just YOLO, especially because the resets are so cheap. But all right, so I think that's the last question. Guys, if there's any more questions that you guys have, feel free to pop into the chat. I think we covered a lot of stuff today. We've been on the session for about an hour. I'm okay to stay on longer if you guys have more questions, but I think we covered pretty much everything we planned for today. We initially started with the breakout. I showed you guys the breakout. I showed you guys the market flow V2s. We answered a couple of questions regarding threshold and strategy. We covered the details regarding the breakout time frame wise and specifics with entry. And I think those are all the questions there. So let's see. Stanley said, how do you handle the threshold during eval when it says, when say it goes to 75,000 profit, then retraces back in your entry, you blow the account just because you went back to entry when in reality you weren't in negative. Yeah, no, that's exactly how it works, Stanley. You would have to lower your risk. So you wouldn't risk 7,500 per trade. That's the main way to do it. So that's why for me, even though I have profit, I'm still risking 1,500 because I'm staying within the criteria, right? So like I said over here, I'm taking 3 contracts. So for me, I'm letting the trade run to full TP or full stop loss. So every time I take my trade, this is how much I'm risking, 1,500. So it doesn't make a difference. Either that day, I'm either going to make 1,500 in threshold or I'm going to lose 1,500 in threshold. It's not going to be anywhere outside that. I know you're trying to YOLO your accounts right now. So I'm not even sure what contract size you're using. But you shouldn't go that far out. So I'm assuming you're probably using maybe more than 5 contracts. Well, what contracts you're using, Stanley? I can kind of like do the math for you. Let's see. Are you using like 10? 20? Okay, yeah. You're going on account blown mode. You're going way too heavy with that, Stanley, because you're doing 20 contracts. So let's see, 20 contracts. Yeah, bro, there's no way. Because you're already risking 10,000 on the trade. That's that's crazy, bro. You're risking more than you even have in your threshold. That's why you keep blowing the accounts. You got to go a little lower, bro, because it's just like you're going way too high. I mean, if you want to really YOLO it and you're just going for but the thing is, if you YOLO it that way, you would have to have like back to back. Well, I mean, if you want to just keep trying your luck, because the thing is, if you have like, for example, we had 4 back-to-back wins right here. We had a whole bunch of back-to-back wins over here. If you really want to go full port, I would keep it at 7,500. So let's go back to that number. So let's see what number you would need where you could safely full port your account. Full port meaning you just YOLO it. Like you're trying to pass it ASAP. So that's what they mean by full port. Okay, so you probably have to use, I wouldn't use anything past a 15 contract. All right, Stanley, I think that's your biggest number because I mean, I guess you could go higher because at that point you're kind of just you really are YOLOing it at this point. Let's divide this by two. So 3,700. This is how much I would probably recommend you do it, but this would just be nah, you probably want to do a 15 contract because this would just take too long. You'd have to have like a pretty long win streak to actually pass because you need 20,000 to pass. Divided by 3,750, you would need five, you would need like basically 6 days like of back-to-back wins for you to pass that. I mean, it's a tough call. Honestly, I wouldn't YOLO it on these trades. I would just YOLO it on news. Like I wouldn't even bother on this. You have to just look for actual breakout, like a breakout that pushes like you just look for a high news event. Like I'm not going to recommend you do this, but if you really want to test your luck, tomorrow morning at 5:30, that's where you want to take those YOLO trades. You don't want to take the trades for the breakout because the breakouts aren't going to go directly to your move, right? So like for example, like how this over here retraced back, it's not going to be in your benefit because like you said, price goes down and then it retraces up. You can still blow your account if it goes back to break even. So these breakouts are not going to be your friend for these YOLO type moves. The breakouts are your friend for like actual entries. But if it's going to range like this, like for example, these 2 days, like these past 3 days have been ranging. So you can go back into profit like super heavy and then it shoots up and then you're pretty much screwed, right? Same with this one over here. Price can go down to close to like 50 points and it swings right back up and you just at that point you might have blown your account already. So your YOLO type trades that you're trying to do, you shouldn't be doing it during the breakout because the breakout's not going to give you the number that you're looking for full port is you're looking for 117 points and you don't get that with one push. In order for you to get the like that instant where you just go straight to your TP, you have to trade a news event. Like you'd have to trade this news event like at 5:30 tomorrow. I don't know if this will spike. The only news event I can recommend to you that will probably spike would be NFP. That's the only safe news event. NFP, so there's only three events. There's NFP, CPI, and PPI. Those are the only three events where you're going to see a big spike. Um, and I'll show you. So let's go to NFP from like this month. And if you want to take it even riskier, you can even trade NQ. NQ has like the way bigger spikes. Like if you're trying to YOLO your account, like really full port it to get to maybe pass with like one move, you probably want to do it on NQ. The only problem with NQ is that it's not stable. So you can go into negative real quick before it shoots to your TP. But let me see if I can pull up because that's the number you'd want to take 35 contracts the max, and then the number that you're looking for is 117 points. I know it because I've done it before, and I know it works. It's just really really tricky, super tricky. I think NFP was on the 6th. So NFP is not always going to be smooth. You can see over here, this thing wasn't smooth, but it spiked up. So if you got in right at NFP, like I said earlier, you have to go for 117 points. So if you took NFP right here, see how this thing spiked all the way up? This is what you're looking for. You're looking for that one candle to spike to your entry. You can't have it kind of screwing around, right? You can't have it where it's bouncing back and forth. You need to take it where it's like it's going to spike right to your TP if you're going to take those types of trades where you're going full port, full contract size, and just going straight to your move. But again, the downside to that is if it retraces back too far. Okay, so for example, I get 35. This thing retraced about 35 points. If we do the math there, 35 times 5 times 35, you wouldn't blow the account, but you get kind of close to it. You get down to negative 6.20, negative 6,125 trailing drawdown. And then thankfully it spiked right back up here. So you'd still hit your TP. So you basically could have full ported this and you would have passed your eval with like one trade. Yeah, so yeah, Stanley, if you're trying to do that move, don't do it for the breakout, bro, because it's not going to work out on the breakout. It's too choppy. It's too choppy for you to get to get that move. Like if it pulls back and then it retraces, you're gonna get screwed because you could be in profit, but you'll still hit your trailing drawdown. Yeah, Sam said Stanley's on a mission. Yeah, Sam over here said wait for FOMC. So FOMC works too, but the big days that where it works the best would be NFP, CPI, and PPI. Luckily for you, Stanley, CPI, NFP is coming up like next week. So yeah, if you want to hang tight, just get some, stack up your accounts and just wait for NFP next week. You can take 20 accounts for a buy, you can take 20 accounts for a sell, and one of the accounts hopefully will hit. But yeah, just don't do it on the breakout. If I knew that's what you were doing, well, now I know that that's what you're doing. I wouldn't tell you to do something like that. You have to go with smaller contract sizes because you got to be able to withstand the possible retracement or pullback. Let's see, David's asking, how can I be on the Zoom for the breakouts daily? If you want access to the Zoom, David, you can go on the website. Website's kodikaitrades.com. If you just want access to the live sessions, just go to the live trading room right here. This is where you can get access to the premium. If you want access to the indicators so that you can do it yourself, you can go over here to the strategies. You would need the momentum indicator to do it yourself, but if you just want to sit in on the Zoom sessions, because I call out the direction right before market open. So every day at like 6:29, I'll call out the direction in the Zoom, and then you can just take the entry. But if you want to do it yourself, you can do it yourself too. It's just up to your preference. I think ideally you'd probably want to just follow me, so you can do that just by going to the website here and then clicking on live trading room. Let me check out the Zoom real quick. Let's see. CJ's asking, when you trade at 5:30 news, do you set a pending order? Yeah, no problem, David. No, so no pending order. When I take the news, I just get a market order, CJ, because it's the same thing with the breakout, right? You don't have time to set a pending order. You just gotta, as soon as that 5:30 hits, you just gotta take a direction, whether it's a buy or a sell. So you could just rock, paper, scissors it, whether it's gonna be, or you can flip a coin, right? If it's heads, take a buy. If it's tails, take a sell. And then hopefully NFP works in your direction. My guess is that NFP is gonna be bullish this week, guys. Or not this week, this month. So the next NFP is probably gonna be bullish. So if you want to take a lucky bet on that, it'd probably be for a buy. Because I think with all the news happening, the interest rates getting cut and stuff like that, NFP is gonna be bullish, of course. I think the jobs are gonna be weak, but markets can be bullish for NFP. So if you want to give it a shot, NFP is next Friday. It's not this Friday, it's next Friday. First week of October. NFP happens first Friday of every month. All right, let me scroll up real quick. Next question over here is from Vamal. So Vamal is asking, on a 50K, what style be our max win and loss? So we're within. Sorry, Vamal, I'm kind of confused with your question. Let me reread it. Maybe you want to rephrase it. So Vamal is asking, on 50K, what style be our max win and loss? So we're within. Um, Let me see. Yeah, I don't really understand the question because you're asking, so we're within the 40% rule. What 40% rule are you talking about? Because I mean, we're always within the 40% rule. Which let me see. So Amal said, what's your max win and loss must be? What should our max win and loss must be so we are within the 40? What's the 40% rule that you're referring to? Trying to understand. I'm not sure which one. Are you talking about the consistency rule? All the strategies are within the consistency rule, if that's what you're talking about. Yeah, because I don't know what you mean by the 40% rule. Like what's yeah, all the strategies are within the 40 the consistency rule. Which one wouldn't be, Vimal? I'm kind of curious now because like you kind of brought it up. I'm like, which one wouldn't be? Because they're all within the 40% rule. The breakout's a one-to-one, so you wouldn't be outside of it. Same with the market flow V2s. The market flow V2s, if you're doing a 1030, you're still within profit. Uh, you don't go outside the consistency rule. And same with the liquidity push. Like Max over here is only taking liquidity push, right? So all he took was liquidity pushes, and he got his payout. So he's obviously within the consistency rule. So 1030 works. I'm just trying to figure out which one are you. So Vimal's question is my question is not about the strategies consistency rule, but um, so are you just you're just asking about the consistency rule? Like you want to understand what the consistency rule is. Is that correct? So the consistency rule is just okay. That makes sense because your question earlier um was like specific, like what style would be in our max. So yeah, your question is the consistency rule, right? I mean, it doesn't matter if you're on a 50K account, a 100K account, $1 account. This consistency rule doesn't change them all. It's the 40% rule, right? So for example, you can't have you can't have where you're making more profit. Like for example, you can't make $1 one day and then make $100 the next day. That's like the biggest thing. If you want to break it down more, so I don't even know what the consistency rule is. Do you know what the rule is? Let me see if I can pull it up because I mean we don't fall under that issue ever. So let me see if I can pull it up on Apex. Hey, I just know that it's like it's a big number. Like you have to have like that's like if you're doing like 100 stop loss, like 100 point stop loss and like a 10 point TP, right? That's you're obviously gonna be uh okay, consistency rules. Like it's a pretty big number. Um so here I pulled up the website. Let me see if I can find it here. Because we just never run into into that problem. It only happens with people who like don't use a stop loss. So like okay, here. So here's they give you examples right here. Like this is the example that I just mentioned. So for example, you're going for 10 points, but your stop loss is 100 points. Like this is where you kind of like where you can screw. It's like so obvious that like you don't even have to think about it. So let me go over here. I have to go on a higher time frame because you're not going to be able to see it. So this is where you violate the consistency rule. You see how big your TP and how big your stop loss is? Right there, they even give you that same example here. They say, you know, you take 9 trades, you have a 90% win rate, but you only make $10 per trade, and then on your loss, you lose like $1,000. Right? This is like an example. This is the same example that they gave. Like you can't have something like this where it's like super obvious. You can't have like 9 wins where you make 90 point, where you make 10 points, and then you have one loss where you lose 100. That's a consistency rule. I don't think, I mean, you should never be using a strategy like that. There's actually a YouTube trader who trades like this. You guys probably heard of him. He's kind of like he was all over the YouTube lately. His name's Don Vo or something, or like Controller FX. He was like managing accounts trading like this. This is crazy. Like like our 1030 is kind of far out too, but it's not like that. It's not like where you're gonna see like this is okay. This is our 1030, right? But there's a trader who was doing this. Like, yeah, he had like a crazy win rate because obviously, like, duh, of course you're gonna have a crazy win rate if your stop loss is super far out like that. Like all he did was take the trade, and then he would just like wait for it to come back. Like it doesn't matter where how far in drawdown he was. He would literally just take a trade and then just wait for it to come back. So he'd be holding on to it for as long as he needed, and eventually you would hit his TP. And the thing is, he was trading NQ, so the volatility is so high where it just, goes back, hits TP, goes back, hits TP. So the consistency rule, I don't know the exact number, Bomal, but I'm okay, 30% consistency, right? So like basically you can't do, I think the farthest you can go is this right here. Like this is where the threshold kind of lies. You can't go anything lower than this. So 1030 is fine, it's perfect, but you typically can't go like more than this. Like you can do 30 stop loss and then 1 point TP, right? You can't do something like this, Vimal, where and then this obviously wouldn't even work because you have to cover the expenses. But yeah, say for example, you just enter trades and then you just go for like 1 point every time. That's like what you can't do. Yeah, exactly. Sam said, yeah, he blew a whole 3 million. One loss equals 1 month of profits. Yeah, it's crazy. Like, see whether 1030, it's pretty tough too, but it's not like you're not gonna blow your account trading this way, right? As long as you go for like the stuff that's like it meets the criteria, you'll be fine. Like you're not taking. See, the thing with this guy is that he was taking like I think he took 300 trades in an hour. Can you guys believe that? That's crazy. 300 trades in 1 hour where he just blew the whole 3 million. Like we don't take that many trades. We take like maybe 1 or 2 trades a day. So you don't have to worry about blowing your account because even if you were to lose a 30 point move, you wouldn't like be that far in the hole. The only time you'd be that far in the hole is if you're taking like 100 trades like he did. Um, so yeah, well, does that make sense? I know, sorry, we got kind of like confused there because I thought you were talking about a specific strategy. None of the strategies or the styles we trade will fall under the consistency rule. The only way that you do that is if you're doing something crazy like, like I showed you just right now, 10 points versus 100. Like this is where you would trigger it. If you never lose, then great, perfect. You just keep winning. But once you have that one loss, it's going to trigger it because that one loss is going to be super huge. Yeah, no problem, Kamal. All right, so let's see. Yeah, Barack said he still uses the 1030 to date, um, and hoping that one day he'll be able to get to that 1-to-1. Yeah, no, exactly. Well, now we're doing the 1-to-1 for the breakout, so it works out perfect for us. I see Stanley said coming from FTMO, Apex seems very strict. Yeah, no, they are. They're very strict. So they have their pros and cons. Like they're very strict, but they also give you 20 accounts. So like with FTMO, I was able to get a max of 600K in accounts. With Apex, I have 6 million. That's a big difference, right? So I'll play by their rules to be able to trade that much and have that much leverage versus how it was with FTMO. The thing with FTMO is that I mean, if you followed FTMO lately, Stanley, they're actually more strict now. They don't even let us take a 1030 TP stop loss anymore, from what I heard. There's a couple people in our group that do 1030 TP stop loss, and we've been doing that for years, right? With FTMO. FTMO like denied one of our guys their payouts because they said you can't do that anymore. So they're actually more strict now, and they're kind of going downhill. I don't think much people are using FTMO anymore, but they're running through it. It's crazy. They're struggling. They're struggling because they don't have as many users, and then on top of that, they're like denying payouts and stuff like that too. So that's from what I heard. Yeah, Sam said, yeah, lots of props nowadays, very fake ones too. Yeah, you got to be careful with which prop firm you decide to use. At least with Apex, there's a lot of people who use them, and there's a lot of people who get paid out by them. So it's more trustworthy than others. That's for sure. Let's see. Let's see. Stanley's asking, have you done research on whether buy or sell breakout has a better win rate? Uh, well, not exactly, but they're pretty balanced. So like looking over here, it like this is the data that I have, right? So yeah, I mean they're kind of balanced. It's not really one-sided. For the stats for the from November up until September, it was 30 buys and 32 sells. So I mean they're kind of balanced. Now I'm looking over here at the losses. Some losses are buys, some losses are sells. So they're kind of like even. So I don't think it really matters which direction. Because I was thinking about that too, Stanley. I was thinking, what if I just take all the buys, right? I come with the same idea too. You're probably thinking like, should I just take all the buys and then maybe that'll like sway the win rate in my favor. But and you can test that too. If you want to do that, Stanley, you can just go back every day. Go back every day to 6:30, and you can take the stats for like just taking buys. Like no strategy, just take buys every time and see how that plays out. But I don't think that's a good strategy, honestly, because the market's not always going to be bullish. At least not for the breakout. Like it might be bullish for the day, but not for the specific breakout. Like immediately on open. It might like go down a little bit, like 100 points, and then shoot up. So yeah, there's not really it's not really one-sided. That would help though if we had like more buys and sells. But this is from a whole year's data. So or almost a whole year's data. So it's pretty even for the most part. So let me scroll down real quick, see if there's any more here. Let's see, question from Aiden. Aiden's asking, when you took the news trade, was it mainly based on one criteria? Yeah, it's based mainly on news. Everything else was just secondary. So it was literally off the news. That's why I didn't like it because it was so subjective because like just because I see that it's positive doesn't mean that the news is actually positive. Like it was based off my own analysis off the news event. Like I would basically have to kind of understand what the fundamentals were saying for me to decide whether it was a bullish or whether it was negative or whether it was bearish. So the news trade was that's the whole point of it being a news trade. It was based off the news. And then I would use the technicals as a second confluence, but it didn't really influence it. Like once you already had a direction in mind, that was the direction. And then depending if the confluence is kind of lined up with it, that's where I would either go for the full move or I would go for a trailing stop. So it was basically mainly like literally just the news for the most part. See, iPad said when you trade news to pass an evaluation, which news are better to trade in? There's only three news events that I can recommend. It's going to be the NFP, CPI, and PPI. Those are the news events that usually have a big spike. The spike's big enough to catch the move. All the other news events are usually kind of small. So you don't have enough to reach that full 117 points. You might get like 50 points, maybe less, but you really need that full push to get to your TP, of course. Otherwise, you're kind of just wasting the risk because like price can push up and then it'll just retrace back and then you'll be in the negative because of the trailing drawdown. Let's see. Yeah, I've had so the only three news events that I would recommend pretty much going full port would be NFP. That's number one. Number two is going to be it's going to be between the PPI and CPI, producer price index or CPI, consumer price index. Those are the main three events. So either NFP, non-farm payroll, PPI, producer price index, or CPI, consumer price index. Those are the only three events where you'll have a spike that's big enough to reach your target goal, which is 117 points on a 300K count. The goal will be different on different account sizes, but if you're going to YOLO it like that, you might as well go for the 300K. right? It's like, what's the point of YOLOing it if you're going to go for the smaller account? Especially because they have the promo going on where it's only like $50 for a 300K account. So it makes sense to just do the 300K. It costs probably cheaper than the smaller accounts. Oh, Aiden's asking about the NFP CPI trades. Um, honestly, for those, you probably want to go both directions. Like if you can afford to pay for it, because here's the thing, you're either going to take, when you take those trades, and this is like the secret behind it, it's like you're either going to get lucky. Do you want to be lucky or do you want to be guaranteed? Right? Those are the two things. I'd rather go with the guaranteed. It's going to cost like maybe $500 to get 20 accounts. Um, I would probably get 20 accounts where I'm going to take where, yeah, exactly. So if you're trying to go like full, like super full port, you'd have to buy like 40 accounts, right? So if you use 20 accounts, that's like $500, maybe 500 to $600. Those trades would just take buys. And then the other ones, you would do the same thing, but the opposite, take sells. So if you really want to get funded like 20, because I've seen people do this. People actually do this like pretty often. They do it. And I know because I know them personally and it's worked for them. I probably wouldn't do it, but where I probably would split it up. Like I'd have each news event like kind of split up along, certain accounts doing for each news event. NFP is like the number one news event, of course. The reason why I would split it up is because you're gonna have that small chance of you blowing all the accounts. So I wouldn't do this with money that you don't like. It's got to be money that you're okay with losing because you're either gonna basically guarantee that they all pass, or if the mark, so say for example, NFP comes out and then this happens, like you can't really see it well on YM, but I'll go to NQ. NQ is like where I see people do it a lot, and I think NQ is it's a little it's a little crazy. So let's go to NFP for NQ if I can see if I can find it. NFP was like right here on the. See, I see a lot of people do NQ, but NQ is like so tricky where like you get screwed so hard that it's gonna end up you end up blowing the accounts both ways. So let's see, 5:30 on a Friday. Okay, check this out right here. This is why I don't really like NQ. Look how this spiked up both directions. Can you guys see this? Let me go here. I'll just replay it. You guys see how NFP like NFP was smooth for YM, but NFP over here for NQ, you're basically screwed both ways. It doesn't matter. Like, yeah, you'll get the bigger push, but you see how you get screwed? Like you can literally get screwed both ways because you can go for 117 and you might get lucky if it goes directly in your direction. But what I've seen what happens with NQ a lot is that it does this. It opens up and it spikes both ways like this. It does something crazy. So I wouldn't really recommend doing it with NQ. YM is a lot smoother. So for YM, you saw NFP, it kind of came down a little bit like 30 points and then it came straight up. So yeah, I don't really analyze, like you just have to take a guess for the news thing, Aiden. You would just take the guess. Like you wouldn't really, there's no analysis to it because for NFP, it doesn't matter whether your analysis is right or not. It's just gonna go in either direction or it's gonna spike both ways, like this right here. Like, yeah, of course you'll get like a directional push at eventually, but it's gonna be a pretty crazy push where it's gonna do something like this. Like every second it's gonna spike up, spike down, spike up, spike down, and then eventually it'll spike really up and then maybe come back down a little bit. So yeah, Nick's not here. Where's Nick at? Nick is the guy that actually he used to do this, but haven't heard from Nick in a while, so not sure if it's really working well. So I don't really recommend the I want to recommend NQ for that type of strategy per se. You're trying to full port it. I would just go with YM and just wait for the perfect day to do it. Um, let's see. Stanley said, I really wonder how they make money because they make a lot of payouts. How do they make their money? It's hard to believe that they make more. So the thing with Apex is that they actually copy trades. So they do copy trades, but they also make a. So I know people who work within the prop firm space. Apex is making the most money out of everybody right now, and they've been. So you think about it. So like put this into perspective, Stanley. So like I said, 50 bucks per account times 50, like they're making millions a day, and that's barely touching the surface. So say for example, you were to open an account with Apex, right? Say like for example, if you wanted to open 20 accounts, say each account's about 70 bucks. That's like the average. 70 bucks times 20. So that's 1,400, right? For someone who's opening 20 accounts. You think about how many like their user base is probably it's at least like maybe 50,000 people, right? So you think about that, that's 70 million. So they're probably making more than this a month. And then like you said, they're paying out. If you look on their website, they say how much they pay out. Like it's nothing compared. Like this is how much they paid in total. This is how much they paid in 90 days. I'm pretty sure they made more than that. You multiply that by like 90 days, that's 3 months, right? So they're probably making like X amount of money. And then when people do the resets, right? So like I said earlier, or you even know for your own self, like say for example, someone is paying 70 bucks for 20 accounts, right? They pay 1,400 and then say they blow their account because they're doing that YOLO thing you're trying to do. That's another 35 bucks times 20, right? It's another 700 bucks. So you do 700 times 1,400 and you think about these people, they're probably buying accounts multiple times per month, if not per week, if not per day, right? You multiply that by like say we'll use an easy number like 30,000. It's like 63 million in a month. So you think about it, it's a racket. It really is a racket where they're making money. Whether they're copying trades or not, they're still making a ton of money off the people who are just buying 20 accounts, trying to pass them, loan them, reset, loan them, reset. You think about yourself, like think about how many times you reset your accounts. There's people out there who are buying 20 accounts and then resetting them right after, like they're on a crazy spree. Um, so yeah, I know they're making like millions per day. Like I know that for a fact because I know people who are in the prop firm space that own their own prop firm companies, and everybody is kind of tied in together. So everyone knows what everybody else is doing. That's why everybody's copying what everybody else is doing because they're trying to be like the person who makes the most money off prop firm space. So it's a question from Shivam. Shivam's asking, hey Sean, how would you play 20 evals going short and 20 evals going long at the same time? Does Replicano allow that? Yeah, it does. So you can do the ratio. Use the ratio function, but they all have to be the same account. Like they have to be the same account size. You can't have like half of them at 150K. You can have half of them at 300 because they're going to take the same contract size. So you would use a ratio function. You would take all of the buys with +1 ratio. You would take a buy on your main account, and then for the opposites, you have ratio at -1. So it does instead of taking a buy with 35 contracts, it would take a sell with 35 contracts. That's how you do with Replicano. So CJ is asking, hey Sean, have you received any updates on the note eval phase firm? Not quite. They're still on Rhythmic. So I've been following them pretty much daily to see if there's any updates, but there hasn't been any updates. They've had issues kind of recently actually with payouts, but I think they've fixed it. So no updates yet. If I do see an update and they allow NinjaTrader, I will start using them and I'll let you guys know. But yeah, as of now, I'm just trading on my personal account, which is fine. And I can scale up on that one anyways. Yeah, no problem, Shivam. All right, guys, I think that's it. We've been on this mentoring session for about 2 hours now. I think we've answered all the questions. I think this session was pretty good. We covered a lot of stuff. I think every session we do is pretty good. If there's any other questions that you guys have, feel free to reach out. I'm going to try to do this again every week. So every week I'll try to hop on this mentoring session with you guys, answer any questions, go over any details, review the trades from the week. I think it's beneficial for all of us. I didn't think about that breakout entry or I wouldn't have thought about the breakout entry unless we started having these mentoring sessions. So yeah, thanks for sitting through with this, guys. It's been a while, 2 hours of this session, and whoever's been here to the last, I mean, you guys, hopefully you guys got all the questions asked. So, all right, guys, if you guys have any other questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow for the next live session. Let's run that breakout back.